We have got to the point.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. What's going on, everybody? I just was sitting up here looking at the screen, and I noticed that when I be doing stuff on my computer, it be making the thing glitch. It be freezing. I could still hear it playing, but it'd be like freezing and glitching when I be like doing stuff on the screen over there. So I guess I need to stop. I guess I need to do everything that I need to do and then just let the pre-roll ad go. So good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Leroy Sr., a.k.a. Aranya Grande. It's just Big Spot if you don't hablo Espanol. And you're in tune to another episode of the Intraday Price Action Recap. And it's being brought to you by the Smart Money Manuscript. Well, Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is a course that yours truly put together. I put a lot of time, effort, and I tried to make it as concise as possible, meaning I didn't want you to have to go through a bunch of long, drawn out live streams, right? And I condensed all of the hundreds and hundreds and hundreds of videos that I got on my YouTube channel into one concise course. And as you see here, it says there's 5 chapters, 40 lessons, and it spans 2.5 hours. Now, they're not 40 actual lessons, right? This counts the videos and the quizzes, right? So it's everything that I've ever shared my knowledge on my YouTube channel, and it's broken down into phases. It's set up in a way that walks you through it if you're an absolute beginner, all the way through if you're a seasoned veteran, So it starts out with the basics for people who are absolute beginners, right? And it's good for everybody to go back and refresh on some of this, because people like my wife, shout out Deborah, when was doing a sneak peek. I was doing a sneak peek and I was going through some of the quizzes with the gang. Deborah was like, this quiz letting me know I need to go get this course. And we was like in the basic stuff. We was in like the budgeting, the banking, tax. We was in this basic stuff. We weren't even down in the ICT concepts. We was like in the basic stuff, right? And so it's broken down to help walk you through from the beginning, banking, budgeting, taxes, right? Then you go a little deeper, start talking about brokerage accounts, types of brokerage accounts, talk about fundamental analysis, introduction to technical analysis, talk about how to figure out how much you need for your own personal retirement. And then we move over into getting a little bit more deeper. Now we're talking about how to manage your portfolio and how to leverage your capital, right? Do you got a retirement portfolio? Do you got an IRA? Do you got a Roth IRA? Is it a regular investment account? Using options and futures to leverage your capital that you have, doing back testing, how to trade options, how to trade futures, right? And then we get into what most of you all are looking for, and it's the ICT concepts. We cover the ICT concepts. Now, with all of this, right, you will be well on your way, right? But there's an added bonus that you do not see when you go to the checkout page, and it's called the monthly Q&A sessions, right? Every second Saturday of the month, right? Every second Saturday of the month at 11 a.m. Eastern Standard Time. It's not AI. It's not pre-recorded. It's yours truly. I go live inside the Smart Money Manuscript in the SMM Live channel right here. I sit down and I answer your questions pertaining to the Smart Money Manuscript. Anything that you need clarification on, anything that you are struggling with, I'm there to answer your questions every second Saturday at 11 a.m. Eastern Standard Time. That's just an added bonus to throw in some mentorship. And yes, it's all for $69.99. No upcharges, no nothing like that. I don't spam you emails about, hey, buy this, hey, buy that. $69.99. You got the course. If you want to participate in the Q&As, that's totally up to you. It's not mandatory. It's just there if you want to take advantage of it, right? First link in the description below. Shout out everybody that's taking advantage of the Smart Money Manuscript thus far. I appreciate y'all. Shout out everybody that's been sharing it with their friends and family. You know what I'm saying? Even if nobody that you shared it with signed up, I appreciate you spreading the word, right? I appreciate you spreading the word. I feel like it's well worth way more than $69.99, but I always want to try to make this financial literacy stuff as affordable as possible, right? As affordable as possible. And if you've already taken advantage, I will appreciate if you go out and give an honest review on WAP about the course. Give an honest review about the course, right? Good reviews always help, and it tells WAP that, hey, these people like this. Let me show it to other people, right? I appreciate y'all. Now, did Price do anything today that caught you off guard? Right? Did Price do anything today that caught you? If Price did something today that caught you off guard, there's a link pinned to the top of the YouTube chat. I don't know where your YouTube chat is. My YouTube chat is over here, right? My YouTube chat is over here, and pinned, like if I do just like this right here, I'm pointing at that pinned comment right there. I'm pointing at the pin. I'm bringing my hand a little lower. I'm pointing at the pinned comment right there, right? So I don't know where your YouTube chat is, but there's a pinned comment right at the top of the YouTube chat. That pinned comment is a link to the Zoom that this is being filtered through. If you want to pull up and ask a question about, hey, I expected Price to do this, but it did that, click on that link. You will go into the waiting room and I will let you in. I no longer allow people to just come directly in because there's been a lot of pornographic stuff popping in when I shared the link publicly like this, and I don't want to offend nobody, right? I got a lot of like most of my participants on my live streams be females, and I don't want to disrespect nobody. And I definitely don't want to disrespect the men either. But, you know what I'm saying? As a man, I got this thing about showing females respect, right? So let's get to it, man. Who we got up in here? I see we got Lump up here. What's going on, Lump? I see we got Here to Learn and Share. We got Kim. Shout out Kim. She got the top fan crown today. Y'all give it up for Kim. I don't understand how the top fan thing work because it's never the first person that has the number one. It's always either second or third person that has the number one. I don't know how it works. We got Rhonda Green up here. Now Here to Learn and Share is the top fan. Here to Learn and Share is the top fan now. I don't know how it works. We got Honey. What's going on, Honey? We got Felicia up in here. What's going? Tasha, tell my homeboy Snoopy I said. Got Tasha up in here with the homie Snoopy. I see a few more numbers than I see names, but them the only names that I see. So that's all I'm gonna say. Shout out to everybody who put up on the pop-up today. We had a pop-up live stream today inside the Discord. I think you are. Oh, they great in comments. I don't know how it works. I really don't know how it works. At first I thought it was just for people who be like commenting on a lot, but it's like sometimes I'll see somebody who just type something one time and they'll be like number 2 or number 1. And you got other people. She said, I keep losing my spot. I can't figure it out either, man. I don't know. I'm thinking about it now. Let's go figure it out, man. I'm thinking about it now. I want to know. Let's go figure it out. Hey, did my screen go black? Why did my screen? Oh, okay. You of the tubes. How? I put hope. How does the top fan ranking work on YouTube chats? YouTube live streamer leaderboard chat. That's a 3 months ago. Was that out 3 months ago? That wasn't out 3 months ago, was it? YouTube, how I rank number 1 on you? No.
Experimenting with a new live stream feature, particularly for the live chat, and it's called Leaderboard.
What is it all about?
This is where users can earn XP points or experience points to basically rank in a leaderboard. What's it all about? We're going to dive right in right now and see what YouTube has to say about this experiment. They've already documented quite a lot of stuff. So we're going to jump on over to my screen share right now. All right, what you can see here is the article on YouTube's help page, and I'm just going to highlight the sections and we're going to go through it really quick. Now, this is the basic gist of what it's about. The leaderboard creates a fun, interactive, and rewarding environment for viewers that encourages ongoing engagement with their favorite creators. It is visible during live streams and ranks viewers based on their engagement in a given live stream. Now, they do note that this is an experimental feature and currently being rolled out to a select group of creators. So right now, it's just random out there. You might come across this on some live streams, and if so, what they're doing is basically looking for feedback because it's an experiment. So if you see it and you have some opinions about the audience ranking based on their total points. The more viewers engage, for example, via live chat messages, super chat, super stickers, or gifts, the higher they may rank on the leaderboard.
May rank.
As viewers engage with the live stream, they'll notice a crown icon at the top of the chat, which displays the cumulative points that they've earned for engaging with that specific live stream. Clicking on this icon will take viewers directly to the leaderboard to see the top 50 engaged viewers. The top 3 engaged viewers even get a special badge next to their name in the live chat. Now, one thing they note is only viewers age 18 and over are eligible to participate. That's hard to say. I don't know why I can't say participate. Eligible and participate in the same sentence. This is an interesting thing. I'm not sure why that is. It may be because
the kids now, creeper,
can't super chat. I don't know. I don't know the reason. That reason may come out in the future. Now, this is the reasoning why they encourage people to participate in the leaderboard. The leaderboard offers a fun new way to connect with your favorite creators and other fans during live streams. Here's what you can look forward to. Get recognized. Your active participation via live vanity, you could say. Join in the fun. Competing on the leaderboard can help you become part of the top 50 figures and gifts. So this is something that will be sending chat messages, super chats, super stickers, and gifts. So this is something that will also appear in vertical live streams, if you notice there. Now, you can opt out. Now, I believe this is opting out as a viewer. Let's open up. Yes, viewers are automatically enrolled in the leaderboard. If you prefer not to participate, you can opt out in your YouTube settings. So a set of menus on the left hand under live chat. Turn off leaderboard participation. That's on when it's blue. Is there anything I can do with experience points once I've earned them? Now, this makes sense. You would think that you could do something with these. The top 3 on the leaderboard earn a badge, which appears next to their name when they send messages in chat. And that's it. Right now, during the experiment at least, that is it. Badge will keep it during the stream and while they do more. If I make one of the top 3 spots on a leaderboard and unlock a badge, how long do I get to keep it? Viewers who earn a badge will keep it during the stream and while they hold one of those top 3 positions. Badges will be reassigned in real time as viewers change positions on the leaderboard. Once the live stream ends, viewers will no longer retain their badges. So again, a very temporary thing. Now, how much is each eligible action worth? The experience points, or XP, are automatically calculated when viewers send a live chat at no cost or purchase a super chat, super sticker, or gift. But that doesn't even answer the question that they even pose themselves. What's it worth? It's worth XP points, but we're not going to tell you. Maybe it's going to change. Maybe they're not sure what to make them yet. That's why they're not listing it here. But it's interesting. You would sort of think that, okay, a normal chat would earn X number of points, but a super chat or a super sticker, something where they've put some skin in the game, might be worth some more points, extra points. I don't know. That's how I see it anyway. Okay, is there a limit to the number of points that can be earned through live chat messages and paid engagement, super chat, super stickers, and gifts? Yes, there is a cap on the number of points they can be earned from your live chat messages. And that basically answers the question. There's a cap, but they don't tell you what the cap is. And we've discussed that. We've seen that some caps are like very low. people get to the cap very quickly in some of the streams that we've seen so far. And then it says also, doesn't really answer the question, but they say also, depending on the user's country region, the daily and weekly purchase limit will vary. They're talking about super chats and super stickers and so forth. There are limits to how much of that you can buy daily or weekly. This doesn't really affect that unless you like want to go to town just to earn XP by dropping a lot of super chats or something like that. You might hit a super chat limit, but that may not increase your XP if you already hit whatever the random ceiling is for those. So yeah, there's a little bit of information.
Get out of here. I'm bored now. You ain't giving me what I wanted. YouTube pay me and cash them in. Tim is a select few. Just a little friendly competition with no prize. Yeah, ain't no prize. They ain't giving nobody nothing for it. Oh man, I was out doing some yard work with my son at my honorary second mom house today. I'm dog tired, man. I'm so tired. I was over there. I went over there to trim a tree, like shape up a tree. She got a tree in front of her house. I went to go shape up the tree. And when I get there, I'm looking at like all the bushes and stuff in front of our house, and everything is like all overgrown. Not everything, but most of it was all overgrown. So I'm like, man, I can't leave mama looking like this. So I'm out there trimming stuff up. And man, let me tell you like this right here, man. Whenever you do something with an 18-year-old young man, you might as well just do it by yourself. You might as well do it by yourself. This man is out here, right? I gave him my glove. I said, this is a sticky tree. Here, use my gloves to pick up. I say, rake up the stuff that I'm cutting down, start putting it in the bag because it's hot. I ain't trying to wait to the end to start cleaning up. When I tell you, it took this man an hour and a half to rake up the first set of bushes that I cut. Now, I done cut the big tree. I done cut the little bush next to it. I done cut the smaller bush next to that. I done went down the front of the house, trimming back the rose bushes, cutting them back off the walkway, right? And I got ready to go start on the big bush in the middle of the yard, and he's still over there picking up the stuff that I trimmed off the first big tree. Every 5 seconds, he fanning bugs, blowing bugs off himself, running from stuff. He picking the stuff up one piece at a time like this, because he stuck his hand twice. And once he stuck his hand twice, that was it. He ain't reaching down, grabbing it no more. He picking up one piece at a time, dropping it. I'm like, son, get the rake it. I ain't trying to stay here all day, son. I'm hot. I'm tired. Right. I was like, I'm sitting there like, oh my God. Right. So when we get finished, I'm like, son, you still, he's like, I am picking it up. So I go over there. I start picking stuff up, putting it in the bag because I'm tired. I'm sweaty. I'm hungry. I'm ready to go. So we finally got finished. She came out. She was happy with everything. She trying to buy us lunch. I'm like, no, I told you, because I was supposed to go tomorrow. And I know how she is. And I know when I get there, she was going to try to have some money or some food or something. So I popped up today to do it, to catch her off guard. So she ain't got time to go by the bank. You know what I'm saying? She ain't got time to, be coming to me, get me a little something for you. She ain't got no time for none of that. Right. So when she come out, she talks to them, just please let me buy. I said, we taking care of you. That's it. Just chill out. We taking care of you right now. All right. And so we fired off and left. And when it got something to eat, came, but man, I'm so tired. When I tell you it had to be, I ain't checked the temperature, but it had to be at least 98 degrees out there. At least. It had to be at least 98 degrees. It was so hot. It was so hot out there. But anyway.
Think about all the fun you had.
Yes, sir. It was amazing.
Hey, in my nephew's defense, First of all, he's a chef, not a lawnman. Slash, and he's a model, and he's an influencer. So none of that got nothing to do with cutting trees and sticking figures. You know what I'm saying? My nephew don't live like that.
I know he
All
don't live
right.
like that.
Okay.
And he's not from the hood.
Okay, right, for sure. For sure. That's a good thing because you put in enough hours. So he ain't got to be from the hood. Yeah.
Man.
Give my nephew long.
Man, look at here. Boy, look at here. It was a time. We had us a time. All right, man. Let's get to it, man. Let's get to it. Like I say, there's a link shared at the top of the chat in YouTube. If you got any questions, you like to pop up and unmute and ask a question. I'm gonna go ahead and get to it. I'm gonna be looking this way. I can't see the chat, right? So if you want to say something or you want to put something in the chat, just know that I'm not gonna be looking at the chat until later, or if I ask a question. All right. If I don't ask a question, I'm not going to be looking at the chat, but I'll look at the chat later. You know, so if you don't want to pull up and unmute and talk. All right. Turn your attention over here, right, to the charty tart, right? Today was Thursday, September 8th. Hey, my nephew got a birthday coming up next Thursday. Next Thursday is my nephew's birthday on the 25th. His birthday the 25th, ain't it, Lump? And his birthday the 25th.
I'm not sure what day it is, but it's
Come on, Pack a Darn. Come on, Pack a Darn.
I go to 24th, 25th, eat somewhere.
I think it's the 25th. I think it's the 25th. All right. Nothing can stop me. We all the way up, right? We all the way up. Prices continuing higher, right? We had talked about when we came into August, we was trying to see if we had put in a high and was going to start the bearish trend, right? But we said we have not had a higher time frame market structure shift, so we're not trying to call the top, right? We fiddle-faddled for a while, and now that we've moved into September, the market has continued with the uptrend, right? So that's why we always say you never try to pick a top. You look for the signatures, right? If the market's ready to do a deeper retracement, or if we're just retracing back to a anticipatory reactionary point and then continuing the trend, right? And if we squanch the chart up, right? If we squanch the chart up, this is kind of speckled, right? It's a little speckled here because we're on the new contract, but we can see that we started the month right around this area here, right? This is where we started the month, right around that area there, right? And then that's August, right? So we took out there's the July high, right? So this was the July high right over here. Oh, it's the right color and everything. Come on. Right, close enough for government work, right? That's around the area where we was looking when we came to August. We was looking to take out this high and see if we started the bearish down move, right? Now remember, we said on the higher time frame, we still had not. Let's go to daily candles, right? Look at daily candles here. Why isn't my thing showing there? All right. So going into August, this was the high we was watching. This is where August started right here. So going to August, we dropped down. kissed that sell side right there, poked just below it. Then we rallied up, and then we took out the buy side. Then from there, we said we was watching this high to see if that was going to be our smart money reversal, right? But on the higher time frame, what do we say? We don't get a market structure shift on the higher time frame until we trade below this low right here. Okay. So we come down, we got an inversion fair value gap, right? We got another inversion fair value gap. And then we trade it down into that bearish order block, right? And for those that was watching the ICT video with me, right? Those that was watching the ICT video with me, if you don't remember, he had gave out a nice little gem of a gem, right? He gave us a nice little gem of a gem when he was talking about trading at or near all-time highs, okay? So the little gem that we picked up, we watched the live stream together. When was that? Was that Monday night or Tuesday night? Was it Tuesday? It had to be Tuesday night. Monday night, he didn't drop nothing because that was when he was supposed to drop it. Then he dropped Tuesday night. We watched it Tuesday night together inside the Discord. Okay. And inside of that, right, he gave a gem where he was over here somewhere. It was, I can't remember where he was at. He was in this area over here. But the gem that he gave was when we're trading at or near all-time highs, right? Whenever price trades into these down close candles that's supposed to be supporting price, right? You can anticipate, like normally, right? This is how we normally watch order blocks, right? We normally watch order blocks and we're just looking for the respect at main threshold. Okay. Normally, that's how we normally watch order blocks. That's how we was taught to watch order blocks, right? But the gem that he gave is when you're trading at or near all-time highs, right? What is people trying to predict? People are trying to do what? Pick what? What are people trying to do? They're trying to pick what?
The top. Tell us not to try to pick the top.
Yeah, people trying to pick the top. So the gem that he gave is whenever it's coming down into these areas that's supposed to support price, right? The algorithm would deliberately trade below that close right there, right? It'll trade below that close just to trap people going short. And if you notice right here, right? We came down and this day closed right here, right? The next day, what do we open? We open below that close. So now breakout traders are chasing it to the downside. So it opened, went a little farther, and then turn around and rip they freaking face off, right? Straight up to the upside, right? And it's not just the down close candles. It's up close candles too, because what? People are trying to pick the top. So when it opens up and it trades down below this close right here, it totally overshoots it, tricking people into thinking, oh, we're finally gonna drop. And then it turn around and rips they freaking face off, right? So the gem that he dropped is like when you're up here and people trying to pick the top and you see the algorithm trading down below the low, don't be the first guy to the party, right? Anticipate that to be a Judas swing and then look for the signatures to stay in line with the higher time frame. What have we been saying? Higher time frame is in a buy program, right? It's in a buy program. So when we're in here selling, what do we say we're doing? We're looking at intraday charts and we're trading during this short-term sell program only during intraday time frame. Why? Because we're not trying errors. We said nothing about this chart is saying sell for a long term, and nothing about the chart is saying buy for a long term. Why? Because we're way up here in the premium, right? There's nothing. And I said, if you want to buy for a short-term swing, ain't nothing wrong with that because we're still in the buy program. But for the long term, there's nothing saying buy for the long term because we're all the way up here in a premium, right? And you would just be buying based off of a short-term narrative, right? And then for selling, you're selling for a short-term narrative, preferably intraday, because we still haven't had that break in market structure or market structure shift on the higher time frame. So the buy program is still intact, right? Now, when we get all the way over here to September the 5th, nope, I'm lying. When we get all the way over here to September the 10th, all right? When we get all the way to September the 10th, nope, not yet. September the 12th, we finally poke above the new high that we made in August, that high that we have been watching to see if that was our smart money reversal, right? We finally stretched above it. And then once we stretched above it, there, what have we done? We've extended the buy program, right? We've extended the buy program, the overall buy program that we're in, we've extended it up like that, all right? And so now, right, this from here to there, that's our latest expansion leg for the buy program. Okay, that's our latest expansion leg for our buy program. And whenever you are looking at an overall buy or sell program, right, you're always focusing on the latest expansion for your shorter term trade ideas, right? The latest expansion leg for the shorter term trade ideas, right? And then when you're looking at this dealing range right here for the latest expansion there, if you notice here from equilibrium on down, we've been very efficiently delivered in the lower half right there. So whenever you're looking at the vet seat from here, from this low, once we came up here and we broke out the top of this range right here and extended it up, right? If you look right here to the high, when we first extended it right there, right? When we first extended it there, if you notice, right, all of this here is efficiently delivered. And then starting here, we start moving up and coming out of that range from this candle here, moving up. Let me blow it up so y'all can see exactly what I'm saying. All right. Right. What do we want to understand when it comes to price? Do we want to understand like entry models, or do we want to understand what's far more important than looking for entry models? What do we want to always keep in mind when we start
knowing where you're at in price,
knowing where you're at in price, and then what
the time?
Yeah, time is king, but what do you want to understand about knowing where you are in price? Right.
The order flow.
Order flow, and then what's the second thing you want to know?
The price delivery.
Price delivery, right? So the order flow gonna let you know if you're bullish or bearish, right? The price delivery, you got the understanding of why price is doing what it's doing, right? You understand why it's doing what it's doing, and you understand by combining that with the order flow, you understand if we're going toward the draw or if we're going away from the draw, right? So when you understand order flow and price delivery, you know why price is doing what it's doing, and you know if you're going toward the draw or away from the draw when you combine it with order flow, because the order flow gonna let you know if we're bullish or bearish on every time frame. Is the higher time frame bullish? Is they say intermediate time frame bullish or bearish? Is the lower time frame bullish or bearish? Right? Because if you figure out my higher time frame is bullish
right? When I go down, just say my daily is bullish. If I go down to a 4-hour, is the 4-hour bullish or bearish, right? That's going to let me know if is it in line with my daily. When I go down to the hourly, is the hourly bullish or bearish, right? I already said the daily is bullish. So if the hourly is bearish, that means they're not in sync. I can trade in that bearish trend, but I know I need to be in and out. Why? Because it's going against what the higher time frame is saying, right? Same thing, all the way down to a seconds chart, right? All the way down to a seconds chart, right? Time frame confluence. Okay, so back to what we said. All of this is efficiently delivered. Starting right here on the 11th, right? We start to move away from there. And on the 12th, we break out, right? So now, right, this is our latest dealing range. This is efficiently delivered. And when we start to leave it here, what is this right here now, right? That's a balanced price range. Why? Because it's efficiently delivered and then we leave it. Once you leave it, it's a balanced price range. Okay. Now, since this is a balanced price range, we're looking for what? It to act as support. Since we're looking for it to act as support, we don't want to see what price dig back down into it, right? Unless price is finished with it and is ready to cut through it like butter and go the other way. So now, instead of watching from here, from that low of our dealing range, right? Now we're watching from the low of the displacement leg that started to leave that area, right, to the high. And if you notice there on the 12th, when we broke out, we made a high, then we come here, all right? What did price do? Remember what Michael said, even here, right? Even there, every last one of these days. Let's look at these days right here. This day, this day, this day, this day, right? Even this day, every last one of these days, right? What did price do? Right? We open up, went below that closing price, turned around, ripped everybody's head off, right? We gapped up, traded down below that closing price, turned around, ripped everybody's head up. Opened up, traded down below that closing price, pushing well past it, turned around, ripped everybody's head up. Opened up below the closing price, traded down a little bit farther, turned around, ripped everybody's head off, right? Even here, we opened up, traded well down, right? And then turned it around and started to reverse, right? Started to reverse like this retraced back up. Oh, that hurt a lot of people's feelings. We didn't get all the way back up here, but that hurt a lot of people's feelings. Ripped some heads off. Open up below the closing price, turned around, rip people's head off, right? Every single day, it's been doing the same thing, inching higher and higher and higher and higher. Now, if you notice here, from the low of the area that start to leave, we set a high, right? Once we end here, do we retrace back down? No, we continue up. So what do? Right? We continue to stretch our range up, right? Stretch our range up. We open up here, we go up. Do we retrace back down? No, we don't, right? We go up there and we mark our high, right? We got a nice little rejection off of there. Now, what do you notice the algorithm has done once it started leaving, right? Who can tell me what, once we started leaving here, right? Because when we went there, or when we moved up there, okay, you see, like this candle don't exist yet, but right here, you see this right here. What is this right here? Somebody tell me.
A volume imbalance.
That's a volume imbalance, right? Now remember, none of this right here exists yet. So, man, let's do it like this right here. All right. So that's a volume imbalance. Where's that volume imbalance in reference to the area we're focusing on now, because we're leaving this balanced price range? Where's that volume imbalance?
It's in the premium.
Yes, it's in a premium. All right. Now we're going to come here, right? And we go up there, right? Now we got here, We got our we got a volume imbalance there. We got a fair value gap here, right? So now we got a fair value gap there. We got a volume imbalance there. Where is this fair value gap and this volume imbalance at?
Not in a discount.
They in a discount. So then we come here and trade above this high and get this nice rejection off of there, right? What do? We move up there because we're, you know, we're coming. It's like we haven't retraced back down. Now, what do we have right here?
Another fair value gap.
Where's that fair value gap located?
That one in the premium.
And where's this fair value gap located at?
Discount.
So now when we get this rejection off of there, right? When we get that rejection off of there, what do we say? Move all this out of the way, right? When we get that rejection off of that high, right? What do we say is a reasonable draw when we get a rejection after trading above a high? We get a strong rejection like that. What's a reasonable draw on liquidity? I want somebody else to talk besides Lump.
The fair value gap in that discount or that volume imbalance you talking about in that section we were talking about?
I said, what's the reasonable draw on liquidity after we get a rejection like that after trading up into buy side? What's the reasonable draw on liquidity?
The fair value gap in the discount?
Nope. I said draw on liquidity.
Oh, that high we just, the all-time high we broke is the reason we'll come back there and use that as support.
No. If we come up into a swing high, right? If we come up into a high, right? So if I come into a swing high and I reject that swing high, what's the reasonable draw on liquidity after rejecting that swing high?
Oh, the low that sent you there?
The low that sent you there, right? So if I trade above a daily high and reject that daily high, what's the reasonable draw on liquidity?
Oh, the previous candle's low.
The low right there. Okay. What is that low in conjunction with?
The top of a fair value gap or
That
part of
discount visit.
Yeah.
Right. So now, right, the algorithm has traded up high enough to put a discount PD array that's in line with a previous high, right? That's an important high. That's a time-based high right there, right? That's an all-time high right there. Time-based liquidity. Okay. So now it created a fair value gap in line with a prior high, right? In line with a prior high. Now, when we look at this right here, right? Now, looking at this entire thing, you know, Michael teaches you to make your annotations like this right here, right? Include the volume imbalance. Now, when he first taught it, right, he said, if we exceed consequent encroachment with the wick, right, treat them as separate PD arrays. Don't put it as one full imbalance. Now, mind you, this is very close. So at this point right here, if you say, hey, I want to include the volume imbalance inside this thing because we just barely, you know what I'm saying, touching above that, hey, that's up to you, right? But for me, I'm looking at it as this is my fair value gap and this is my volume imbalance, aka new day opening gap, right? I'm just looking at it as two separate things, but keeping in mind it can very well be treated as one entire inefficiency because that little wick is, you know, you're pulling teeth at this point just because it poked a little bit above consequent encroachment. Right now, if it would have been like way up here, right, then I'd be like, yeah, definitely it's exceeding consequent encroachment. But when it just barely touch it like that, right, you can go ahead and include it inside there. All right, but now we got a new day opening gap down there. All right, so now I'm looking at it like that with my imbalance and my new day opening gap. All right, or you can look at it as one complete inefficiency. Okay, because like I say, that wick just barely touched consequent encroachment. Okay, so now when we reject this high, right, now the reasonable target is the low that sent you there because it's just a daily candle, right? Right, we came up, made a high, right, and we open up here, we reject that high, so we're looking at going back to that low, right? If we would have come from a swing low, right, and then reject the high, we'll be looking back down toward that swing low as a reasonable target. Okay, now as we start to come back down, what are we anticipating? Right, we're anticipating all of this area here to act as a balanced price range. Okay, so what do we have over here? We got, when we extend up there, we got our inefficiency area over here with our new day opening gap and our BISI, one whole inefficiency there. And then what is it doing? We're in line with the wick of this bullish order block right here, right? The wick of this huge bullish order block right here, and a old all-time high. So this inefficiency is resting in line with all of this confluence right here. Order block, right? And then this inefficiency right here at a key level, right? A key level of real support, right? Why is that? Time-based inefficiency, okay? And at that, a higher time frame inefficiency inside of a buy program / bullish trend. All right, so now we got a reason to come down, right? We're coming down into a discount, got our inefficiency in line with support, right? Looking for that to act as support, okay? And then, right, we come down, right? Trade down into the whole inefficient area there, all the way down into the new day opening gap. If you don't mark it as just a new day opening gap and a BISI, and you just mark it as one full inefficiency, trade all the way down close to the low of the inefficiency, and then rally back up, right? Rallying all the way back up to here, respecting the top fair value gap, right? Now, you won't be looking to just buy off of this. Why is that? Because it's in the premium, right? You're looking to buy in the discount, right? You got your BISI, got your volume imbalance, you got the wick of the order block, right? You got the wick of the order block over here, okay? Now, coming down into this area here, right? Looking at this wick, you're looking at this wick, right? Where price is trading from here, right? Now, this is how I choose my PD arrays that I'm watching in the order that I watch them, right? When price opens up here and we start trading down, right? If we're looking this way from where price opens up at, looking this way, right? This BISI is the first thing you come to, right? This wick here is the second thing you come to, right? This wick here is the third thing you come to. And then this wick here, this imbalance there Actually, you got this wick here too, because it's a little bit higher than that, but this is a huge wick there, and it's on a bullish PD array, right? And then you get to your volume imbalance, new day opening gap, right? So as price is coming down, right, paying attention to this right here. So if you grade, we're just going to grade the entire imbalance there, right? Right, we're grading the entire imbalance there. We got the fair value gap here, right, combined with the volume imbalance there. Grade the entire imbalance, right? And then when you look over here, we have that wick right there, right? And then when you look over here, right, we got that wick right there. Okay, so now what do we all, I know it's a lot going on and your eyes probably hurting right now, but what do we always say when we're looking at trading into PD arrays? All right, when we're looking at trading into PD arrays, we want to see price do what? We want to see it go at, preferably hit this point and get gone, but ideally hit this point and get gone. What are those levels?
You be saying 25 and 50 or something like that?
Yes. You want to see it hit that
First
25 and
quarter,
get
yeah,
out of there.
first
Hit
quarter,
that
yeah.
first quarter and get out of there, right? And then you give it all the way to the 50 and get out of there. Now, what do we say? When we coming down in price, you're looking to the left, what you come to first. You get here to, let's just say, the whole inefficiency, right? So as you coming into the inefficiency there, into the fair value gap, you still have a reason to come down here, a volume imbalance, right? Once you get to the volume imbalance right there, right, there's nothing else down here, right, except for liquidity under these lows. So there's no more imbalances, right? When you come to the left, there's no more imbalances here, right? So once you get to the farthest imbalance, right, what else have we traded into? The next PD array was this wick over here, right? This wick is also incorporates this wick right here too, right? But the next PD array we get to is this wick. So now you're looking for it to act as support here. You're looking for it to act as support here. You're looking for it to act as support here, in that order, right? So once we come down into the inefficiency, and once we trade into the next area of support, because once we hit the fair value gap, we still got a reason to go there. We still got a reason to go down. There's an imbalance there. When we hit this wick right here, right, that right there is the 25%. That right there is the consequent encroachment, right? We trade down and get to the last imbalance, right? Get to the last imbalance there, right? We've traded just beyond the 25% of that wick, the next one we come to, right? And we've stopped right before the consequent encroachment, right? What else resides right there? When we look at the next bullish PD array wick right here, this wick here, that's that 25% right there, right there. And we fail to get to it, right? We fail to get to it, okay? Now, when you look here on the bottom of that, we also have a discount wick right here. And when we look at that discount wick, where did price stop at? Right at that 25%, right there, right? Because you always want to see an algorithmic reason for price to do what it do, right? Even when it come really close, like we come really close to this, we came really close to the 25%, But when you look over here at this discount wick, we came directly to the 25% of that discount wick, and then we got back out of there, right? After we've come to the what's the name, PD rate. And then looking to the left here, right? We got that fair value gap. Price hits that first, right? Price hits that wick, right? As price keep coming down, price hits that wick, this wick too, right? So it hit that one and that one. And then what does it hit next? That wick right there, right? And that wick there is in line with that fair value gap. So all these different areas, right, of support that you're getting to, right? That's just the way I order it. Like as it's coming down, because price is looking to the left. So as it's coming down, and the reason why I do it like that, this is just the reason why I do it like that, is because as it's coming down, it's looking at prices, right? The algorithm is looking at, it can't actually see it can't see this box. It can't see none of that stuff. It just knows 24,980, 24,298 and a quarter, 24,275, 24,250. It just notices. So as it's coming down, right? If this wick is longer, it's hitting that price before it hit this price. It's hitting this price before it hit this price. You see what I'm saying? That's why I look at it in the order at which it hits it going to the left. Okay. And then when we get into this discount wick, right, we trade right down to that 25%, stop in its tracks, right, just before we get to the 25% of this wick, right, just before we get to that 25%, stop in the tracks, and then reverse, right, bounce completely off it, using it as support, not at some random spot, at a key algorithmic level, right, based off of what the algorithm has done as we're going up. Okay, I just deleted the wrong thing. It's right here.
Hey, Tim.
Yeah.
So when that big red wick dropped down and filled all those gaps and imbalances, that made that a balanced price range once it done left there?
Yes, once we leave there. Yep, once we leave there, because we've offered buy side delivery, we've offered sell side delivery, and then we leave. Right, that wick is showing delivery in both directions.
Yeah.
Right.
Yeah.
So we offered sell side, we offered buy side, and then now we've left. Right, we've left there. So now, as price comes back in, right, with price coming back in, if we start trading back down, right, if we start immediately trading back down into this, right, you want to see if it's going to act as support or if we're going to just cut right through, right, and get a break in structure. And then what are you going to be watching coming down? You're looking at, right, your discount wick as you're coming down, right? But when you're coming down here, right, you got a wick here, right? That's your first thing you're looking at. How do we react coming down into this premium wick, right? If price starts to sell down, how do we act in that premium wick? Okay. All right. Bless you. Right. How do we act coming down into this premium wick? Also, whatever on lower time frame, but on a daily time frame, right? How do we react here? Right. As prices going up, how do we react to the premium wick? Right? Do we go up into the premium wick and then react off of consequent encroachment? Right? We get the consequent encroachment and turn around. If we get to the quarter and turn around, showing heaviness, right? If we reach all the way up into it, that ain't really showing heaviness. It could, but if it's really heavy, you want to see it hit that 25 and go. At the most, hit that 50 and go. Okay. Now, as we start to come back down, right? Are we hitting this 25 and bouncing? Are we hitting this 50 and bouncing? Right? Are we starting to dig really deep down into it? If we start to dig really, especially if we start getting closures below that consequent encroachment right there, now we turn our attention to the discount wick, right? Are we coming here to this 25% as we come down into it because it's in line with an inversion fair value gap? Are we coming here and respecting it, right? Or are we starting to just cut through all of this right here and getting a bearish breaking market structure, right? That's and it's based off the time frame. So we're looking at how is price reacting, right, at these closing prices, right? If we trade up into there, trade back down below this close, right? Once we get down here, do we get a reaction to take us back up above that closing price? Use this as support, right? Or do we just start to slide back down through this right here, right? And you're watching it based off the time frame that the PD array exists on, meaning daily charts. You know, they were going into the weekend, right? So it'll be something that you're watching throughout the next week, right? You're going Friday. This is our last trading day. So if we don't get some crazy reaction and blast off or just tank here going throughout the next week, this is what you're watching. Do we use this as support? If not, do we use this as support? Then if not, do we get that bearish breaking market structure? And what are we leaving in wake? Are we leaving SIBIs over here, right? So if we leaving SIBIs over here and just say, if we create a BISI right there, now we're watching that BISI right there because that's the first BISI that went up and took out that high. So if we get down here and start creating SIBIs, now we're looking at this inversion fair value gap and watching to see if we're using it as resistance after getting that bearish breaking market structure, right? So that's how we just walk it through, just like that there. All right, so that was the daily stuff we was looking at. We came down and then we expanded back up. All right, so we're gonna just drop straight down to a 15-minute time frame. Okay. Oh, let me go back to the daily. I don't know what I just did. Let me go back to the daily and get my stuff right because I don't need all of these on there. Don't need that. Don't need that. This is today. All right. So we came down and we expanded up. And this is today's price action. Okay. So now coming into today. Right. This is the one that did the most damage, right? This your wick that did the most damage, right? As we open up here, right? Coming back this way, that's the wick that did the most damage. All right. So looking at that and right, that's our close right there. We open up below the close and we start to rally. All right. So like we always say, you focusing on the consequent encroachment, but we grade all of our imbalances, right? So we grade that right there. And now we drop down into the 15-minute time frame. All right. And this is yeah, that's when we open up there. Yeah, this is when we open up right here last night. All right, so we open up here last night at 6 o'clock. Right there, we had a slight gap down. All right, so we had a slight gap down at 6 o'clock. All right, this over here, that's our wick that did the most damage. These are the quadrants for that wick that did the most damage, right? What do y'all notice about price as we're going up through that wick right there? Y'all see the sensitivity in price at those quadrant levels, right? All of them quadrant levels, you see the sensitivity in price, right? So we open up here, right? We gap down below the close, right? Below the close there, right? We open up, gap down below it. Then we displace away, right? Taking out that high right there, right? So all these relative equal highs there, we come up, take out these highs right there. Then we form 1, 2, 3, 4 fair value gaps, right? Now, this fair value gap right here, where was that fair value gap created at? Right there on that lower quadrant, right? Created right there on that lower quadrant, okay? Also, we see that we have right. You see here, price drops down there, price goes up here. Then we go into this holding pattern, drop down, right? Create these relative equal highs, right? So when price came here and went up, right? This was the highest point that we came up to and then dropped back down. So this little move right there, what does that create? Right? That creates a bullish breaker, right? That creates a bullish breaker. Now, on this time frame here, right, we do not have a up close candle that comes all the way up to here, right? We don't have an up close candle that comes all the way up to here. But when you think about how breakers work, right, we're looking for this area here to act as support, right? When we coming back down, you're mitigating any shorts that's underwater, all right, and you reaccumulate in new longs, right? So for this time frame, we don't have an up close candle that actually reaches up there, right? But we do have a breaker as far as up close candles in the midst of that right there, okay? Even though we got all this time distortion right there. And when you look, see, this is the afternoon session, then this goes into Asian and into the London and go down, right? So this is your time-based, right? That's your afternoon session breaker there. And then this 345 candle right there, right? I'm gonna pop it on right there like this right here, right? And then we're gonna go over here to regular trading hours right there, like that. You see that right there? That's an important high right there, right? That's an important high right there. Time-based liquidity. All right. That's time. That's time-based liquidity. That's an important high right there. All right. Then we go back there. And where is that time-based liquidity resting at? Right there at that quadrant level right there. Okay. Create that BISI at that quadrant level. Where's the majority of the BISI resting? Below the quadrant level, right? So we get to the quadrant, majority of the BISI is resting below the quadrant level. What does price do? It goes up, stops just short of consequent encroachment, pulls back down into that that lower quadrant level, into that BISI, trades back up to and through consequent encroachment, taking out the high, right? What do we get here? An immediate rebalance, right? Looking at this right here, you want to see that sensitivity, right? Michael calls it discount sensitivity. You want to see that discount sensitivity in this immediate rebalance. You don't want to see it come here and start doing, right? What y'all always hear me say. Personally, I want to see that next candle at the latest 2 candles over. I want to see it getting out of there because I want to see that sensitivity, that discount sensitivity to that immediate rebalance, right? So we come here, get that immediate rebalance off of that propulsion block right there, right? We got our bullish order block right here, right? So as we come down, trade back up. Remember what I tell y'all, whenever we trade through that opening price of an opposite candle, that's a change in the state of delivery, right? We was bearish, came down to an anticipatory reactionary point, that quadrant, that fair value gap. Not only is it a quadrant fair value gap, all of this right here is what? Efficiently delivered. All of this down here is efficiently delivered, right? It's efficiently delivered. And then when we're coming up here, this candle right here starts to leave that area, right? Now, all of this is a balanced price range right there, right? Come from there up to the high, right? Where do we go? We came back down into the discount of the range, right? At that quadrant level, at that fair value gap that was created at that quadrant level. And this is based off of that wick, right? And then once we get to consequent encroachment, right? We take off again. And this time we blast all the way up, right? To the top. We go to the top. We push straight through the upper quadrant, right? Push straight through it. Come up here and we trade up through the high, right? Once we take the high, what do? We break back down, get a bearish break in market structure, right? Don't trade back into the fair value gap. And then we immediately drop down and trade right back into that consequent encroachment. Trade right back into that consequent encroachment of the overall wick, right? We trade down into, right, that bullish order block / propulsion block, because we got an order block here, then an order block that is off of there and price displaced away from it. Trade into that propulsion block, okay? And not only do we trade into the propulsion block, what else do y'all see that we trade into here? If I get this arrow tool and anchor it right there, then I stretch it over here. What is that right there? Y'all see what that is right there? Volume imbalance. No volume imbalance there. Looking at what price did here. We consolidated, displaced away, trading below that low, trading below that low. What is this right here? That's the first civvy created when we dropped down, took out that sell side, right? So when we trade back up here and close above it, now that becomes what? That's our high probability inversion fair value gap, because that's the first civvy that was created when we dropped down and swept this liquidity, right? Before getting this change in the state of delivery. All right. So when we go up here, when we trade up here and take off, right there, we trade up there and take off, trade above this order block here. That's our change in the state of delivery based off of that order block right there. Remember, I tell you, it's always a change in the state of delivery everywhere you look, right? So let me just do like this right here. Right. And then once we go up there, what do? Right? We drop back down, come back down into that inversion fair value gap right there, into that propulsion block, right? And where is that resting at? Inside the wick, right? Inside our range of that wick, right? Where is it? Below 50%, right at that quadrant level, right? We got this whole order block there, but we got the inversion fair value gap right there, just below the quadrant. Got the propulsion block right there, just below the quadrant, right? We come down here, touch the quadrant, right? Respect it, right? Drop down and touch, the inversion fair value gap once there, right? Drop down once more here, trading below that low, touching the inversion fair value gap one more time, propulsion block one more time, right? And then we displace away, right? Trading back up here. Look like we created relative equal highs. I can't really tell there. Yes, created equal highs here, right? Pulled back down, then displaced up and took out the high and continued up, right? Continued up. Once we got up there here at, this is like 8 something in the morning over here. This is today at like 8 something in the morning, right? We drop all the way back down, right? We drop all the way back down here, coming into 930, right? We talked about this on the pop-up, right? At 930, right? We trade up into this SIBI, trade up into that inversion fair value gap. What gap is that? That's the first one that was created when we went up there and took out that buy side, come back down, displace down, SIBI right there. So we're looking at that balanced price range, which is in a high probability inversion fair value gap. We trade up into it, and then we drop down, boom, right? Come here, trade below the opening price of that propulsion block. Remember we said about them down close candle, the closing price, what we said about on a daily time frame when we trade below that closing price, trying to trick people into going short. So you're looking at this propulsion block and you say, hey, we're trading down past mean threshold of the propulsion block, right? We trade down past the closing price here, right? So somebody on that closing price there, they're selling, trying to break out because this is supposed to support price and we're closing down past it. So they're selling there. Then the next candle opens up to add insult to injury. We drop down, right? Trading down past the balanced price range down there. And then we turn around and rip everybody face off, right? Going back up, making all-time new all-time highs, right? And then where is that happening? Right there at that 25% of that upper wick that was watching on the daily time frame, right? The upper wick that we was watching on the daily time frame. All of the intraday stuff is reacting very well to these higher time frame PD arrays. And if you understand what to watch on the higher time frame, right, you understand in price delivery. You understand why is it going to these levels, right? It's an algorithmic time that it's looking back to these PD arrays created at an algorithmic time, right? And once you're looking at them PD arrays created during these algorithmic times, right, now you got key levels that you can watch for true support and resistance. Why? Because the algorithm understands the size of that wick, right? So since it understands this is the low of the wick, this is the high of the wick, it can do that math really quick to say these are the quadrant levels that I need to refer back to, right? And you got very deep, very specific price points you can look to engage with price, right? You got very key price points you can look to engage with price. And if you just say, okay, I don't want to sit here and wait for the long to set up during the day. No harm, no foul. I took 2 trades today on the short side, right? I took 2 trades today on the short side. Why did I take 2 trades on the short side, right? Like we say, when you understand order flow and price delivery, you can engage educatedly. 7 a.m., right? What's 7 a.m.? Somebody tell me what 7 a.m. is. Don't nobody know what 7 a.m. is? Pre-market open. Thank you, Kim. Everybody done got quiet on me. All right, everybody done got quiet on me. Y'all sleeping? Y'all tired? Y'all want to go in and shut it down? Y'all done got quiet on me. Y'all want to go in and shut it down? I done talked y'all to death. All right. I'm sorry, y'all. That's enough. I done talked y'all to death. We'll go ahead and shut it down. Hey, hey, man. I guess we'll stop it there. I done talk y'all to death. Don't nobody want to talk back to me. What's going on, Mike Pence Fly? Tell Empire Traders I said what's up. Who just said no? He'll learn to share talk about no. No. I'm over here talking, throat all dry, ain't nobody responding back to me. Hey man. And then all the other stuff we went over inside the we went through all the other stuff in the pop-up. All the stuff I was about to talk about now, we went through all that in the pop-up. So I already shared those gems. For those that was there on the pop-up today inside the Discord. They said it was a good session. Tomorrow is Friday. So we got
today. It was a good session, man. It was a good session today.
Appreciate it. Tomorrow's Friday. We got tape reading in the morning. Got a football game tomorrow, so I probably won't do a price action recap. Because when I get on here, I get to talking, then it start going long, and then I be trying to rush to the stadium to catch halftime and all of that. So I probably won't do one tomorrow evening. Right. If I change my mind, y'all will see the notification. If not, then I'll see y'all. This is the third Sunday. 1, 2, 3. Okay, this is the third Sunday. So we have Q&A for who is it? The platinum and diamond members in the Discord. So we got Q&A for the platinum and diamond members in the Discord. This is the third Sunday. Yes, on the 21st. All right, so if I don't do a price action recap tomorrow, I'll see the platinum and diamond members on Sunday. And then I'll see the diamond members tomorrow for our tape reading session. All right. Y'all enjoy y'all evening, man. Hey, why I can't see my stuff? Oh, it's down there. That's why. Okay. What is that right there? I'm sorry, y'all. I'm trying to figure out what this stuff is on my chart. Oh, it's just stuff that I left there when I was talking. Okay. All right. Sorry about that. All right, man. Y'all enjoy the rest of y'all evening. Hopefully y'all got something out of this. If you didn't, I'm sorry. I'll try my best again next time. If you're welcome, Monica. If you did get something out of it, hey, share it with somebody. Maybe they'll get something out of it too. If you haven't taken advantage of the Smart Money Manuscript, it's the first link in the description below, right? $69.99. I feel like it's a deal of a steal of a deal, right? Got everything that gets you well on your way to be an educated investor and trader. It goes deep into a lot of stuff that, you know what I'm saying, you probably never even knew. You know, it covered like the ICT concepts in a very concise and to the point way. Everything is concise and to the point. It has quizzes to test your knowledge on the stuff that you've learned. And then the best part of it all, it comes with mentorship in the via Q&As every second Saturday at 11 a.m. Eastern Standard Time. So if you got questions, all you got to do is pull up on the second Saturday of the month at 11 a.m. inside the WAP app and pull up for the Q&A and be like, hey, Tim, I got a question, right? $69.99. You can't beat it. Tell a friend to tap in. Hey, man, till the next time I decide to get on Al Gore's internet and share my thoughts in this thing that we call price action. It's your boy, Timothy Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you don't hablo español. Y'all be safe out in these straight streets, man. I'm gone.